Welcome to the Transparent FX Academy. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Let's start from gold. Now here on the monthly time frame, what we can see is that the market is clearly in a very strong uptrend. We have seen the creation of several monthly higher highs and higher lows, so the market clearly is in a strong uptrend, and all this push to the upside is fueled by very strong institutional buying. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market is in a very strong uptrend on the monthly standpoint, and that all this uptrend is developing after the break and retest of a quite important historical structured zone, because this level was acting as previous resistance for multiple years. And then what happened is that the market managed to break above that zone, and what we know is that previous resistance, once it is broken to the upside, becomes support. So the market broke the level, retested it as previous resistance turned support, and the current bull run that gold is experiencing and bull market is fueled by the break and retest of the historical resistance zone, followed by strong institutional buying. Dropping down on the weekly time frame, the pattern that the market has created here is actually very clear. What we can notice is that the market has created here in ascending triangle with an ascending trend line, obviously, because when you're having a situation in which the market is creating equal highs and higher lows at the same time, this means that even though sellers are managing to make the market respect a specific level of resistance, which in this case is exactly this level here, anyway, buyers are managing every time to create higher lows. So buyers are still in control of this market, and the next logical step is for the market to create a breakout to the upside. And that is exactly what is currently happening. The market is in the breakout phase from this ascending trend line pattern. Dropping down on the daily time frame, what do we see? Now, here on the daily, I did speak about gold just a few days ago, after the market broke and retested this level. From here, I made a full breakdown explaining all the reasons for which I was expecting this rejection to the upside and for the market to create a new daily higher high. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. But at the moment, what do we have? Well, before we dig deeper here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing in the gold market, obviously, because if we're looking at the data for gold, we're actually already looking at gold USD, because all currencies on the spot are traded against the USD. So if we look at gold, it's already gold against the USD. And what we can see here is that with the last reports, net positions have been massively increased. We went from having 212k net positions all the way up to 266.7k net positions, with longs being increased from an institutional perspective from 275k all the way up to 332k, and shorts at the moment on the institutional side are only 66k. So if we look at the long term, this is one of the highest amounts of longs that institutions ever had on gold, with the low here being at 234k. Now, again, we are at 332k. So let's keep in mind all this strong institutional buying and move back to the chart. Now, here on the daily, if the market will go and retest this level here, so this previous level of daily resistance from which this push to the downside was created, which now that the market has broken into the upside is turned support, what we would have is a quite interesting situation, because a retest of this level would create an M pattern here on the daily time frame. And after the creation of an M pattern, what you would expect is a rejection to the upside and completion of the pattern at the neckline. So if the market will create this M pattern here on the daily, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. So if the market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level. That definitely wouldn't surprise me. Moving on to the next chart that I want to speak about in this video, we have the NAS100. Let's go and see what kind of situation we have here. Now, first of all, from a monthly standpoint, clearly we are still in a very strong bull market. The market has been creating here a series of monthly higher highs and higher lows. And at the moment, we are in a new impulse phase, breaking above the previous high. Now, all this impulse to the upside is fueled, obviously, by the liquidity increase that we're currently seeing. In fact, indexes and also Bitcoin are, that by the way, is the next thing that I want to speak about, are very much influenced by the global liquidity that we're having in our financial systems. And we have an index here which we can follow, which is the global liquidity index, which is this yellow line here. And if we extrapolate only for the M2 money supply, so essentially this is an index, the M2 money supply is an index that usually it is a good measure of the overall liquidity situation that we're having in a specific market. In this case, we're measuring for almost the entire world because we're getting essentially US, EU, China, Japan, and also all the other countries. So this is a good indication of how much liquidity we're currently having in our systems. Obviously, if there is more liquidity, that liquidity tends to move towards indexes as an investment. And that is why we see this correlation, because we can see that when the liquidity is increasing, the indexes are increasing. When the liquidity is decreasing, the indexes are decreasing. So it is a quite close correlation. At the moment, we are at all-time high of global liquidity. So this push to the upside does not surprise me at all. So apart from the fundamental aspect, let's continue with the technicals. Dropping here down on the weekly time frame, again, we can clearly identify an uptrend. The market has just broken and retested this previous weekly resistance, now turned support with a nice rejection to the upside. What you would expect after an impulse is to see a correction and then the continuation to the upside, as already happened here, because here we had this previous level of resistance, the market broke it, retested it, and continued to the upside. The next logical step would be to see the same thing if the uptrend is to continue. So to see first a correction and then the continuation to the upside. Dropping down on the daily time frame, what we can see is that the correction has already started. The market currently is retesting the previous daily structure. This is a previous level of daily resistance from which this previous push to the downside was created. Now that the market has broken it to the upside, this is turned support. So after the break and retest, if you want to measure this correction, so the retest, what we have to do is take our Fibonacci from the low to the high of the impulse leg. This shows us how we have the 50% and 0.618 Fibonacci retracements, so two of the strongest Fibonacci retracements levels that are lining up perfectly with previous resistance turned support, creating a confluence of support here. And when there is a confluence of support area, there is an increased probability of seeing institutional buying, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So in a situation like this, what would I expect? Well, as usual, again, the best time frames when it comes to the directional aspect of the market, those are the higher time frames. But when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. So if the market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level, fueled by strong institutional buying, completing this daily impulse correction and impulse pattern to the upside. Let's move to the next chart that I want to speak about. Now, that is the BTC-USD chart. First of all, let's start from the technical aspect of this market. Now, first of all, when it comes to any kind of instrument, what you're looking at overall is risk management and risk to reward. Now, in the case of a BTC-USD, the risk is that we have seen in the past huge volatility and huge drawdowns. In fact, if we look here from the previous peak, so the previous essentially bull market to the bottom of the previous bear market, we had almost 80% drawdown, right? Now, the current bull market, if we measure it from the previous high, we haven't really seen a huge push to the upside. It's been around 80%. So this means that adjusted for risk, this is not really an amazing performance. So because we are speaking about having previously an 80% drawdown and then an 80% gain after many years from the previous high. So I don't believe that currently the bull market, as many people are starting to say, because many people are following the 4-year cycle, many people are starting to say that they think that the bull market is over and from here we will have an 80% drawdown again. I don't believe that that will happen. I don't think we will have an 80% drawdown. Even if we enter a bear market, I think we're going maximum 40%, 50% in my opinion, not more than that, because the push to the upside has been very, very weak compared to previous bull markets. Even the previous one, what we can see is that from the high to the high, it was 250%, then followed by an 80% decline. So now it wouldn't make sense to have 80% from the previous all-time high and then again another 80%. It makes much more sense if we get only 30 and 40% if we are thinking about the fact that overall this asset is maturing, and so you expect lower volatility from a more mature market. So let's keep that in mind. But in my opinion, I think the bull market is not over at all. I expect more bullish continuation from this level. This level is currently previous monthly resistance, which is now turned support. And we can also see that we're currently seeing this green candle here. Now, if in 2 days and 15 hours, the market will close with this green candle, what I expect is the next candle to follow through with the push to the upside and fill in this wick. This is a pattern I have seen in the market over and over again. If we have a green candle with a long wick, usually the next candle tends to fill in the wick, especially if we are in a bull market. We have seen this over and over and over again. If you see a candle like this one actually is a bit different. But if we look at a candle like this is the kind of shape I'm speaking about. The next candle tends to want to fill in that wick, and it works both to the bullish side and to the bearish side. So I'm expecting the next candle, so next month, to be bullish in my experience. What we can see here also on the weekly time frame is that this level was the previous level of weekly resistance from which all these previous rejections to the downside were created. Now this level is acting as support. I expect the market to test this support a bit deeper and then create a potential rejection to the upside. And I will be speaking about this in just a few moments. Because if we move to the liquidation heat maps, so this is basically where the most amount of liquidity is, so where most people will get liquidated, so people that have leveraged positions, what we can see here is that this level here, so essentially this would be just below this zone here. So this area here is actually an area in which if the market will go and test this zone, we will have a huge amount of liquidations inside of this area. And as we know, the market tends to be drawn towards liquidation zones. We can see here we had a strong one, immediately the market hit it. Again, here the market had a strong liquidation area, the market hit it. And what we can see is that right now we have two major liquidation zones. We have this area here, so around 120K, and this one here, so around 107K. And the 107K seems to be the strongest one. If we look here, we can see 107K has even more liquidations than 120K. We can see here, if you see this horizontal lines, these are the spikes. So if the market will test this zone here, there's a almost yellow area, we will essentially see huge amount of liquidations. And in my experience, what usually follows in a situation like this is that first the market goes and hunts all the liquidation zones here, and then we move to this next liquidation area, and then the next bull market I expect it to continue. So that would fit in perfectly with what I have said so far, that we have that candle that the next one usually follows in and fills in that wick of the candle that I have just shown you in just a few minutes ago. So here also from a liquidation map perspective, everything makes sense. Let's move to the other metric that I want to speak about, which is the amount of Bitcoins currently held on exchanges. Now, what we can see here is that as the price is pretty much moving sideways for many months now, the amount of Bitcoins on exchanges, so this blue line, is continuing to drop massively. This means that the exchanges, so the amount of Bitcoins held on those exchanges, are being dried up. So we are now having one of the lowest levels of amount of Bitcoins on exchanges, 2.3 million, which is quite low. This means that there is strong buying pressure, buying on exchanges and then moving away from exchanges, which reduces supply, and that increases the probabilities that with inelastic supply, the price could appreciate and again enter into a bull market as I expect. So if the market here will go and hunt that liquidation zone that I have just spoken about, what would I expect? Well, here, if the market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a rejection to the upside, again, away from this area for the market to move to the next liquidation zone. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integration, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.